Morning, everyone. This is Brad Matheny. Today's the 23rd of January. The markets have really rallied up. You can see, let me move these out of the way. We've got we've got a pretty solid rally taking place as of yesterday, back up into these levels, right below actually the previous highs, and right at the top, at very close to the 97% Fibonacci level, which is a very unusual level, I know, but it acts as a kind of a double topping formation. So we've got this very deep low coming down off of this rejection point that I've labeled. We're getting a little bit of downward movement today, not a tremendous amount, but something I wanted to talk to you about was my cycle patterns setting up. Let me come over here. And my cycle patterns are setting up with a carryover pattern today, which may end up being more of a sideways kind of a consolidation day, and then moving into a crush pattern tomorrow, which could be a very big downward day. The more this looks like it, we're in a bearish bias. We're moving beyond the topping pattern back over here. I think we may move downward slightly a bit today, fairly quiet day today, and then we may move into that crush pattern tomorrow, which could be a big downward day. Now, metals, on the other hand, are moving into a bottoming formation here today. So I think we could be looking at a base bottom setup, moving back into that topping pattern next week. So really kind of a rotation in the markets. But something else I wanted to talk to you about before we got too far was I highlighted this to a client yesterday, and I want to show you that, the markets, this is the SPY, and it's primarily around the SPY, but you get these, 4 to 8 bar typical rotations moving up to 13 and then maybe 18 and then maybe up to 24, 25. Very rarely up to 24, 25, but you can see here we're adding a 4 here and an 8 here. And the way I count this is rotation in price and higher close. So we need to have essentially a 1, 2, 3, 4 to this black bar, 5, 6, 7, and today would be 8 over here. Now, why is this important? Because 4s and 8s typically act as reversal points. You can see I've marked them here. You can count this, lower close, 1, 2, 3, 4. There's our 4 bar representing right there. 1, 2, 3, 4. There's our 4 bar right here. It rolls over. Lower close. 1, 2, 3, 4. Even if I extended it out to here, lower close, you'd end up getting the base bar here. Then we end up having the higher close here. 1, 2, 3, 4 to this doji. Didn't amount to too much of a stall. 5, 6, 7, 8 in an uptrend. There's our 8 bar. 9, 10, 11, 12, 13. Moving up here to this top. So you can see here that when we get into this 4 and this 8, typically we're fairly overvalued. So we've got to watch for consolidation in this channel right here around this 8. If we blow up through this 8 level, whatever we get today, then we could end up in extended trending. But, this is just my observation that, we'll start down here off of this low. So we get a higher close. 1, 2, 3, 4. So there's 4 moving into our pause. 5, 6, 7, 8. There's 8. 4, 5, 6, 7, 8 right up here. 9, 10, 11, 12, 13. There's our 13. Pretty much right at the peak. Now we'll look for lower closes. Okay, we got a lower close here. 1, 2, 3, 4. There's a bit of a pause. 5, 6, 7, 8. There's our 8 bottom. And it again, you can roll these through higher close. 1, 2, 3, 4. Moving into the 4, pause. 5, 6, 7, 8 up here. I'm going to count that as a higher close. So let me recount this with the low. So here's our 13, lower close. 1, 2, 3, 4. That's correct. 5, 6, 7, 8. 8 moves down to here. And again, counting higher closes, lower closes. Higher close. 1, 2, 3, 4. Move that to here. 5, 6, 7, 8. Move that to here. 9, 10, 11, 12, 13. There's our 13 peak. So basically all I'm doing is counting these rotations in a upward or downward trend. So this was our 8. We look for higher closes, 8, 9, 10, 11, 12, and then 13. There's our 13 right there. So let's go back over this one. How am I doing this? We get an 8, we get rotation, we get a higher close, higher close, higher close. Basically 2 or 3 higher closes in a row, or one major rotation here is enough to start counting. You count the higher closes. So 1, 2, 3, 4 to this point. 5, 6, 7, not a higher close. Higher close, 8. Not a higher close. Higher close. 9, 10. Not a higher close. Higher close. 11. Not a higher close. Higher close. 12. Not a higher close. Barely a higher close. I didn't count it. Lower close. Higher close. 13. So again, this gives you the idea, kind of paying attention to how the market moves. You can use Fibonacci price theory here to try to gauge support and resistance. We're basically at this 4, we can identify that, this is lower support. This is upper resistance coming off of that 4. We get above that upper resistance, we're going to potentially take off. Same thing back over here, 4, 8, 13. We get back over here on this 13 exhaustion point. This becomes our upper resistance. We start to break above that. We're going to go ahead and take off. So now as you roll over here, you can see we get this topping pattern, this lower pattern. 1 higher close, 2 lower close, 3, well, not really, 3 lower close, and then 4 lower close. So this then sets up our 4. Now, higher close rolling out of that. 1, 2, nope, 3, 4. There's our 4. Run right up to exhaustion. Now let's see if we get any others. 5. Down, down, down. We really don't. That's our 4. Now, lower close. Okay, so 1, 2, 3, 4, right down here. So there becomes our lower close at a 4. And we move into a 5, 6, 7. Let me make sure I counted that. 1, let's see. 2, 3, 4, because that is a lower close there. So there's our 4. And then lower close looks like a 5, 6, 7, 8. And there's our 8. Why does this work? Well, I think it's just a matter of exhaustion. I think it's just a matter of this is a traditional type of a move in the SPY, and we get the exhaustion. You can see these lows. The way I start is off a low or some high. Sometimes lows are easier. So you count the bars. So you come back over here, you start counting the bars. Here's our low down here. higher close. 1, 2, potentially 3. We'll see. 1, 2, 3, 4. Easy. 4 right here. Very clear. Now we get into this pullback. Let's look for a higher close. 5, 6, 7, 8. 8 to right here. No major pullback yet. So 8, 9, 10, 11, 12, and then 13 right up into this area. This is an extended trend. With 13, I told you you can get to 24s, but it doesn't look like we're going to get it without a pullback here. So we go 13, 14, 15, then we run into this major pullback here. Let's count this as our first down bar. So there's negative 1, 2, 3, 4. So now we need to pay attention to this bar. 1, 2, 3, 4. There's our 4 low. And again, the idea is once you get to 4s or 5s, you need to be kind of cautious. Once you get to 8s, you need to be kind of cautious. Once you get to 13s, you need to realize that these are extended trending. So here I'm counting this one again. Reversal off the 4. 1, 2, 3, not quite high. 3, 4. Okay, so that puts me at a 4 right here, knowing that the trend may have reached an exhaustion point. Then we come back here, 5, 6, 7, 8, potential exhaustion point. Remember, all I'm counting are higher closes. And then we look for a higher close. Looks like we get it here, 9, 10, 11, and coming over here, rolling for a higher close, 11, 12, 13. So we'd be looking at a 13, rough 13 count right over here. And what's happening here, as you can see, as we rally up, we get, 1, 2, 3, 4 real big rally days, right? 1, 2, 3, 4. Then we get into pausing. Okay. Then we get into 5, 6, 7, 8 higher closes. And if I ignored these black bars, it'd put the 8 right up here. But again, I want you to pay attention to this because look at where we're at again over here. We're coming up to an 8 again, and I believe this is going to be very solid exhaustion rotation in the market. We may get a bit of sideways trading here. We may get a rolling pattern, but it tells me as we move into this 8 that we're very close to exhaustion, a big exhaustion level, which could prompt a major rollover. Now, when we combine that with my cycle patterns, as we see here, and back over here, right there, that we have come across this peak just a day or two ago, it leads me to believe that we're basically looking for a top right now in the market. So if I were to estimate where I think we're going to go over the next day or two, I'm pretty confident that we're going to get some sort of a rolling top moving into this downward cycle pattern into the 8th or the ninth, like I keep suggesting. Okay, nothing has really changed as far as my analysis. It really is, kind of a broad topping pattern. Now, whether we get down here into these lows, 582, 578, don't know. It makes sense that it would potentially try to come down here. It would also make sense that it's trying to fill this gap right here. So potentially we could end up just moving down, which would be roughly a 618 move into this area, 587, 586, 585 on this pullback would be essentially a 618 pullback off of this move. 50% would be right about here, a little higher, 592. So 618 would probably be down here at 588. And again, what I want you to realize is that would be a potential solid downward target. So if we were to see a rolling of price up here near this top, like I predict, moving down through this cycle into this area for the deep V would not be unusual. In fact, that's a very good realistic analysis. And I try to keep my analysis, as realistic as possible. Even my cycle patterns, my topping patterns, I take a look at everything, try to align everything together in a way that's going to be helpful to everyone and try to make these predictions. I make these predictions in advance, just like I did my prediction that we were going to rally up into the inauguration. That's why I set this sell major top pattern here, and down here moving into this low zone. That's why I set this months ago, moving into this buy zone. Same thing why I set this area here as a buy zone, because I believe that this would be the bottom in the market. And sure enough, we did see a bit of consolidation through here, but it was the bottom, rallying up into the inauguration. So, not trying to tout my own horn, but you can see here we've got buy patterns, strongly bullish, sell here, buy here, buy here. Now we're moving into this deep V bottom, and then that should move into a cycle phase back over here into March 4th or 5th, looking at an upper cycle phase back over here. So we'll see how this plays out over the next couple of days. The QQQ, again, is going to react to this same type of topping pattern. Let's come in here and get rid of some of my squiggly lines. And let's count the up closes. So we have 1, 2, 3, 4. We're sitting at a 4 right now. Moving into the 5. And again, I think that we're going to be looking at a pretty solid breakdown in price up here near this top. I think we're going to be looking at, I've drawn this as a flagging channel. I'm going to draw it again because it's a bit more aggressive. So we have this big rally up, coming back down into this low, coming back up through an aggressive flagging formation right here. And you can see we've already kind of broken this flag, this blue flag to the downside, setting up this big broad consolidation. So where we're at with the NQ or the QQQs is we've got this ultimate high level. And currently we have this ultimate low level. And we're in a very broad sideways range, looking for some confirmation here, given the fact that we've hit the 4, given the fact that we're moving up into this consolidated channel range. One of two things is very, very likely. Okay. And it basically boils down to we're either going to get a breakaway, a big Trump breakaway type rally, or we're going to reject at this point and move down into my deep V low pattern back over here, which is, again, at this point, the most likely, in my opinion, pattern. I believe that it's very likely we're going to roll down into this low, maybe this 492, 494 low, maybe up into this 508 area. Let me move this, get rid of that. So maybe into this 508 area back over here. So I'm really looking at kind of two basic low levels on the QQQ. This level here, 508, 509, 510, and then possibly down in this area, 499 to 492 as deeper lows. And it really all depends on how the markets move over the next 2 or 3 trading days. So if we get this rejection here, if we move into that crush pattern tomorrow, and we move into that downward cycle trending into this deep V pattern, then we've got a pretty solid confirmation. If we move into this sideways consolidation here, then we may end up with like a deep V over here trying to roll on out of it, which still could happen. I mean, even though I'm pretty good at my analysis, I think, you got to play the devil's advocate, so to say, what could happen. So we'll see how this plays out the next couple of weeks. It sure does look exciting. Got lots of gaps down here, lots of lots of windows to try to fill on the way down this 525, possibly down to 510 area. We got this range set up. We got this excess phase peak. I would not be surprised to see this roll back down into this 497, 500, 505 area just to try to retest this low before we get out of this move. And like I said, I mean, I think that Trump's actions are going to be fought. I think you're going to see a lot of wishy-washy activity in the markets over the next 2, 3, 4 months. So be prepared for a bit of a sideways, range bound type of market for the next 4 or 5 months. Okay, let's take a look at gold and silver. Silver's moving down big. Wow, I just checked it 10 minutes ago. 30, 50. Very difficult right now to be bullish silver. The dollar must be strengthening, I would assume. Right now. We'll have to check. But long and short of it, silver's breaking down. We're not getting any big move in metals. Remember, silver and gold are moving into that bottoming formation today. So we're getting that bottom formation for both silver and gold. This is a very deep low. I would like to see it come back off of this low. Don't know that it will, but I would like to see it do that. We're below recent support here at roughly $31, $30.92. And we're below or not quite below this support level here at 27.34. So this could be kind of a reactive low to the downside. 1, 2, 3, 4. Yeah, this could be a very reactive low. I'll have to check the news. I don't want to go spend time searching for it while I'm doing the video here. But we're getting a bottom formation. So in theory, we should get some sort of a base that moves higher. And in theory, we should get some sort of a base that moves higher. This does look like a bit of a, I don't want to say panic selling, but it does look like more of an event type selling mode for metals than just a normal price rotation. So more than likely something is going on today or some news has just hit. And this is why metals are moving downward, probably related to the dollar, I would assume. So we're going to move on now back to Bitcoin. 102, trading at 102. We'll go back to 4 hour. And, I'm pretty pleased with the way that I've been calling Bitcoin here recently. We have broken this channel now. I talked about the fact that we were moving into this excess phase peak pattern. Let me change the color here so you can see it. So this yellow excess phase peak pattern set up with this flagging broken down. Now we're looking to see if we can get below this level. So I'm going to mark this green, bright green, so you can see it. And this is the level we need to watch here, guys. 100,250. Ideally, what should happen with Bitcoin, as we've seen this breakdown, is either one of two things. Either we're going to come down here, maybe consolidate a bit, and then break down into this congestion pattern, or we're going to come down, find support, and try to rally back out and see if we can try to break this area, or if we roll back over here, setting up another excess phase peak. Remember, we had that dual excess phase peak type flagging right back over here. We could theoretically do the same thing off of this channel. This flag is very aggressive. So again, if you were to take a look at this and say, well, Brad, where would it go if it creates a dual pattern? Well, look, this basically comes up into this area. And theoretically, this one, if it did form like this, would come up into this area. They don't really align. They don't really cross like this one did. So we'll have to see how this plays. I mean, ideally, if it were to come out here and set up some kind of an aggressive channel, which it's not going to go straight up. I mean, what this is basically telling us is that if these kind of set up like this, we would be looking at a dual channel zone, somewhere up here, 120, 122. And I'm just essentially mapping these two here. Get rid of them. Hypothetically, if that sets up that yellow line and we come up to some kind of correlation alignment, you're really talking in the 124, 125 area, which would mean that we have a chance at a rally right up into this area if this were to happen out here. And I'm not saying it will, I'm not saying it won't. What I'm saying is there potentially is a chance if we got this type of a rolling type of formation here, but we will see. Right now, we're moving downward, and ultimately, it looks to me like we're got a probably a 60, 70, maybe 75, 80% chance of a breakdown into this 92,300. It really depends on this 100,000 250 area. If we break below this level fairly strongly, then we're going to go down to this 92,300, 92,600 area. And then, like I said, if we break even deeper to the ultimate low, my estimate is we're going to go down to 76,450 on Bitcoin, which will be a pretty good haircut. That's about a 28, 29% trimming of Bitcoin here. So we'll see how it plays out, guys. And like I said, right now, we're looking at the SPY being this is 4 hour. Go back to daily. 605.82. I mean, it's down a bit. It's not down a lot. You can see here, shrink this a little bit. We're just off of yesterday's close. Yeah, we've been weaker overnight. Yeah, if we come over and take a look at the ES or the NQ, you'll see we're weaker, but not by much. 0.42 on the NASDAQ, negative. SPX is minus 0.09. Japanese yen is down a little bit, 12%. Bitcoin's down 1.5%. Dollar was up. In fact, this is delayed, but it's daily. See, there's some of the strength we've got in the dollar, or in gold rolling over. 109, 110 is a pretty big number. Let's see what I've got drawing over here. Here's an apex level. So we're coming kind of across this apex level. This is daily, rolling through those zones. We're not in the midst of any current zones. We've broken out. Let's take a look for an excess phase peak pattern. We get this ultimate low here. We flag, we break up into consolidation, ultimate high, potentially. So we're looking at potentially an ultimate high at this area. This would indicate that the dollar has kind of potentially reached right now a peak level. And we have our consolidation range back into this area. So we would, if we have the setup, if we have the excess phase peak setup moving through this cycle into some channeling, we would get some moderate channeling here. Potentially moving into a breakdown back into this flagging area, and then potentially moving back down into the 102, 101 area as a cycle pattern. That's assuming that this is the current ultimate high, which confirms with Fibonacci theory but we need to confirm it with some sort of an excess phase peak pattern. Obviously, I don't have it yet. We don't have the flagging. And at this point, we could either rally up out of this and continue to make new highs, or we break down, moving beyond this low and then carrying down into consolidation and then down into an ultimate low, just like I suggested. So we will see how this plays out, as the dollar weakness would prompt very solid move in metals. And it looks like the dollar is struggling to weaken a bit. There's a lot of demand for the dollar, very strong, but that's likely the reason why gold and silver are moving down into this deep low. To be honest with you, I would be very surprised if we don't get a rally back up out of this over the next day or so. But tomorrow we move into that crush pattern, and if that crush pattern sets up a big breakdown in the major indexes, you could see gold and silver weaken on a panic trade. So understand that you could easily get some sort of a panic move in gold and silver on a big crush pattern tomorrow. So you could get this big breakdown, and when I say big, I mean it could be gold back into 2680, 2690, could be silver back into 2940, 2950. That's the kind of a panic mode. A dollar down in silver, and potentially from our highs, $100 down move in gold over here. But again, let's see how the market plays out and see what happens today. We're rolling into that kind of sideways topping pattern based on my interpretation. And I think we're going to be looking at a nice solid rolling move here into kind of sideways topping. So there you go. Okay, guys, go get some today. Hope it works out well.